Hello and welcome to the Bitcoin Lens episode 6. This is going to be today, I'm going to discuss Bitcoin versus gold. And this is kind of something I've been wanting to talk about since I've seen a lot of talk about this among family members, friends, even being just on the X community, the Bitcoin community, especially gold and Bitcoin conversations, just going back and forth and, just talking about the pros and cons of which is better, whether it be from a store of value, unit of account, medium of exchange, which is better between Bitcoin and gold. Now, full disclosure, I'm not a gold holder. I'm strictly Bitcoin, but I at least wanted to, have this discussion because I think it's worth looking into it, right? Gold is definitely, stood the test of time and definitely wanted to discuss it here today. So, full disclosure, gold is 1,000 times better store of value, in my opinion, than fiat. And this is something that, to me is no comparison. I've talked on previous podcasts about the reckless spending, the reckless printing, the reckless debt cycle we're in. And, gold is definitely going to just hold its value way better than fiat just because of its more limited supply. Now, also to show our respect to gold, we got to show our respect because gold has a massive history. I look at Bitcoin. Bitcoin's got a 16-year history. Gold, you're looking 1500 BC. Ancient Egypt made gold a medium of exchange. So this is many, many years ago. You look at Lydia, which was a kingdom in Asia. I believe they produced gold coins, and this was around 560 BC. You look at 50 BC, the Romans issuing pure gold coins. And then you fast forward all the way to 1848, and you look at the gold rush. You look at the gold rush here in the US, in the West, Cali, big gold rush, and that was certainly prosperous times for many during those days. You also look at Great Britain as recently as 1931. They left the gold standard. The US leaving the gold standard in 1971. So, and obviously, not only looking at history, but just looking at the consumption of gold being produced in the world, which accounts for about 45% jewelry, 22% bars and coins, and I believe it's almost 20% being held in central banks, and the rest of it is just kind of spread across the industry. But gold is also you just compare quickly gold versus silver, and it's about 700 years older than silver. So, by itself, it really stands up against the test of time and against other commodities and other assets. But also, just looking more recently, you look at gold's price of 2,600 year recently per ounce, and that's up from roughly, I believe it hit about the low last year was about 1,800, 1,900 per ounce. So nice jump there, really nice jump for gold. So nice price action. So just wanted to show my full respect there to gold before I kind of dig into the comparisons there, and I'll let you make up your mind what you think is the better investment, store of value, medium of exchange, unit of account, etc. So first thing I want to look at is scarcity. So Bitcoin has an absolute digital scarcity. I've mentioned this previously, and we all know this by now, but Bitcoin has 21 million coins. And that's not going to change. We know already 94% of Bitcoin has been mined and minted. We know roughly 99% of all Bitcoin will be mined by 2031. And we also know the end date's going to be 2140. That's where we're going to have 100% of all Bitcoin mined. So after the halving earlier this year, we can now mine 3.125 Bitcoin per block every 10 minutes. There's about 6 blocks per hour minted or mined, and we have roughly, that accounts for 450. After the halving, it's about 450 Bitcoins mined every single day. So those are very, very clear numbers. We know those numbers. Now, although gold is, in theory, finite, we don't really know how much supply there is. With Bitcoin, we know there's 21 million. With gold, I've read multiple reports where they believe there's still about, at least conservatively, 30% that's unmined. So 30% unmined gold. We mined 84 million ounces in 2008. This is gold. 116 million ounces in 2021. And then in 2024, we went as high as 124 million ounces. So, if the price shoots up, the demand goes up, there's always going to be, they're going to find a way to mine more and mine faster, which will rise the production cost as well. And, that just from the scarcity standpoint there on that first point, that is why Bitcoin to me is superior. I know exactly when it's going to end, how much is left, how much has been mined. The second point here is hash rate. So, hash rate, you might ask yourself, what is this? Now, hash rate is another amazing thing that Satoshi Nakamoto started with Bitcoin, or built into Bitcoin, and that is essentially the hash rate determines the difficulty of processing a block of transactions in the Bitcoin blockchain. Now, the current global hash rate is 631 exahash. That may not mean anything to you. The global hash rate is in mid 2021 was as low as 180 exahash, so almost 4 times as more, which in layman's terms means it's roughly 4 times as difficult to mine a single block of transactions within the Bitcoin blockchain. The global hash rate peak in 2018 was 53 exahashes. So we've gone up a significant amount. That's 12 times. That's 12 times higher we are today than 2018 as far as exahash per second. And then with the exahash per second rate going up, this now impacts the difficulty adjustment of Bitcoin. So as the hash rate goes up, the difficulty goes up. And what that means is you will need more computational power, you'll need more ASICs processors, and you will basically need to lead the pack in computational power in order to find that hash and be able to mine these blocks the fastest and get the most profits. Now, it is really difficult and time consuming to find the hash for each block. And that is basically where these ASICs miners come in and these ASICs chips come in. The more you have of these, that's why these mining pools, they really have a little bit of an advantage over the average miner that just running a node at its home mining. So this is a big one, the hash rate and the difficulty adjustment. Now, this is also on a very linear scale, so we do know exactly what the exahash, what the difficulty rate will be based on Bitcoin mined and based on activity and price. So we will know exactly what those numbers are. Now, the cost of production. So within gold, all-in sustaining cost rose 3.3% quarter over quarter to 1.345 from so $1,345 per ounce of gold. So this is basically the all-in sustaining cost. This means what it costs for a miner to mine an ounce of gold. It rose from in Q1 to Q2. It rose 3.3% to $1,345 to mine an ounce of gold. Now, in 2000, the all-in sustaining costs were around $300 US dollars per ounce of gold. So it's gone up quite a bit, and this is also something we can't necessarily calculate because there's no definitive method to the madness here. Now, how much gold is mined per year? We're looking at about 2,500 to 3,000 tons of gold mined per year. So the incentive price for a miner was 1,500 US dollars as of 2022, and the wholesale and retail margins must be added on top of the processing and transaction costs. So just a few things to consider there for cost of production. It seems like there's quite a few considerations within gold when you consider like mining difficulty and what it would actually cost to mine, and it's not as black and white as Bitcoin as far as like the linear scale of exahash and hash rates and difficulty. So the gold production problem, that I'm seeing personally, is we don't know how much is left. So although we have all these production parameters and we kind of know like what the incentive cost is, we know what the all-in sustaining costs are, we don't know how much is left. So this is just, they're just predicting that it's potentially somewhere around the range of 30%. So although it's finite in principle, we really don't know how much gold is still going to be mined. And as the price goes up and the demand goes up for it, we're going to figure out ways to mine these things, to mine gold much faster. And we may find that there's, the technologies will be improved to mine gold. They'll do it faster. So basically, the cost of production is not deterministic, and therefore, future cost of production, future price, future supply, and future demand is not predictable. And that kind of is concerning for me when it comes to the production side. It is also very centralized compared to Bitcoin. We only have, I think it's about almost 1,400 active gold mines right now operational around the world, which is not that centralized. But when you look at the owners of gold, then it looks a little bit more centralized as far as like who holds the gold. And US, just in the US, we hold as much as, like, I think it's combined what the next three countries hold. So you look at Germany, Italy, and France, and the US holds almost the same amount as Germany, Italy, and France as far as total in gold reserves. That's a lot of gold. And that is, I believe, over 8,000 tons of gold. Another thing to consider is, like I said earlier, as the demand gets higher, the technologies and the incentives to mine more and find more will grow as well. Just for instance, 1950, we just mentioned how we've already seen gold being used 1500 BC. As recent as 1950, we've seen two-thirds of all gold being mined after 1950. So let that sink in. We have history of gold being used in 1500 BC, but we've had two-thirds of all gold mined after 1950. That's kind of eye-opening in my mind. Now, keep in mind too, from a production side, we may have a semi-decentralized production where gold is mined pretty much everywhere, but that doesn't account for the unit of account. So that's something that's very important. With Bitcoin, we have that, right? With Bitcoin, we have an actual unit of account. So this is something that's big for me. Like, we have nodes everywhere. We have thousands and thousands and thousands of nodes all around the globe. Not all full nodes are running as full miners, but we certainly have many, many thousands of nodes running, acting as that distributed ledger that keeps an account on the Bitcoin network and has an account of every transaction, how much every single wallet in the Bitcoin blockchain, or how much every single address holds of Bitcoin. And that is something we don't have with gold. So as of July 2024, it was $5,170 to mine one Bitcoin. And that is assuming you're mining it at 4.7 cents per kilowatt hour. Now, the cost of production, like I mentioned earlier briefly, relies on the hash rate, the difficulty, and the cost of energy. So, since we know the total supply left, and that energy prices, especially in the US, stays relatively level, we can kind of calculate, how much is left, and we can predict what lies in the future of Bitcoin as far as supply and demand. Now, Bitcoin is decentralized with full nodes distributed across the world to keep a distributed copy of the ledger. That to me is the biggest thing, and this includes those mining nodes as well. So the biggest difference here is it's more decentralized than gold. We know the supply that's left. We know the difficulty calculation on that linear scale. There's no centralized figures, politicians deciding on mining. And it's a production that is 100% bulletproof unit of account. So we know the unit account can't be deterred. It can't be messed with. I went over it in previous podcasts, but it'll be extremely difficult to hack the unit of account as far as hacking the whole network and all the nodes. That would be a very difficult thing to do. And then also, gold doesn't have this crucial piece. So really, from the production side, that's really the key thing there for me, that it is decentralized enough, probably in my mind, but there's no unit of account. So as far as the storage mechanisms, this is also a key factor for me. You know, in Bitcoin, I can have the cold wallet. I can put it on an exchange. I can put it on a digital wallet. I can put it in ETFs if I don't want to like touch wallets or anything like that. I can just put it comfortably through my IRA or investment fund, through an ETF, or even just go through my brokerage fund. Gold, if I want to keep gold in a storage mechanism, I would have to look at like an actual safe in my house. I've seen and heard people put it under their floors, buried in their floors, buried in their walls. I mean, it's crazy. Bury it underground. I've seen that as well. And it just seems so tedious just to store gold. Like it would just be so stressful to store gold that way and always be concerned, like, what if someone finds it? Um, Now, gold you can also keep in a centralized bank, and you can store it in a secure vault. But once again, that's centralized, and most Bitcoiners, you tell them that, and they're gonna run. They're gonna run for the hills. That centralized aspect is really scary. Moving on to the transferability of the two. So Bitcoin, I can travel with a cold wallet. If you're fearful to travel with a cold wallet and you're maybe scared they're going to confiscate it or you lose it, remember you have that seed phrase. So you can always back it up, and always remember you can always send your Bitcoin to some trusted wallet remotely where you're planning to move to, whatever. If you don't want to move it physically to a cold wallet, you can just send it to some other wallet, that either a cold wallet that's located in some other place, or just do some exchange that you can access from a different jurisdiction. So much easier to transfer Bitcoin, because obviously when you look at gold, I have to declare all gold when traveling. The weight of gold is significant. The extra baggage is significant. Yeah, I believe if you have more than 4 ounces of gold or 4 coins of gold, I believe it's 4 coins of gold. You got to declare that. You got to declare that at customs. So that's something to consider as well. Now, as a medium of exchange, it is very easy to send Bitcoin. It's very easy to send Bitcoin. I can send it real quick to anyone, straight from my cold wallet, straight from an exchange, and I can do it peer to peer as well. I can also divide my Bitcoin really quickly. So if you just want a fraction of my Bitcoin, maybe 1 or 2 Satoshis, 100 Satoshis for a cup of coffee or something, I can send that to you as well very easily. With gold, I've got to buy and sell via online bullion dealer. Now I've got to trust this dealer. There's no unit of account really, so we're trusting each other, and I've got to trust this person we have never met, or he may have some reputation online, but it's still super centralized, and you're still relying on this guy giving you what he says he's going to give you. I can also buy sell from a local collector dealer, so that's another option. Still super, it's not super secure, and also a lot of points of failure there. With gold as well, I've got to physically exchange the gold. I can't just say, "Listen, I'm going to give you an ounce of my gold, or I'm going to give you a fraction of an ounce of my gold." I can't do that. I've got to give you my gold, and if you're giving it to another person, just like I would Bitcoin, you're not going to say, "Listen, I'll give you a certified check or something that, and I'll back that check by my gold." You're not going to. That's not reasonable. That's not logical. That's not realistic. So you won't be able to do that. So the divisible piece, the medium of exchange, those are two key things for me, and just the ease of sending something via Bitcoin is so easy. Now, government control, Bitcoin will be really tough to control, of course. It'll be extremely tough to control for reasons I've gone through some of my previous podcasts. But I mean, if I've got my Bitcoin on a cold wallet, everyone else got their Bitcoin on cold wallets. You can distribute that to other cold wallets, other addresses. Of course, never try and evade taxes. That's illegal. But as far as like just the weight of the government trying to illegally seize your Bitcoin, that's what I'm talking about here. That'll be extremely tough and extremely tough to track and physically be able to do that, because they'll either need access to your cold wallets, or they'll need your seed phrases or your multi-sig phrases, and that's going to be really tough. And Bitcoin can also be hosted in thousands of wallets. So, if you distributed your Bitcoin across the thousands of wallets, it can be super secure still. And, doing that in gold is just not practical. You can't do that, and that's not going to be practical. Now, let's talk about gold being seized historically by governments. So, you look at the Executive Order 6102, where FDR seized all gold in 1933. So, basically, he forbid hoarding of coins, bullion, or certificates, and they seized all gold in 1933. Then you may say, okay, well, that's one example. No, no, no. So, you look at Australia, they've had a gold confiscation in 1959. So, basically, the Banking Act allowed full seizure from citizens, and it made it legal to seize and exchange for fiat. So the government could literally just come to you and say, "We now want to seize your gold, and we're going to exchange it for this inferior fiat." So that happened in Australia in 1959. Then you look at 1966 and Great Britain's gold ban. So, like I said earlier, Great Britain, they went off the gold standard in 1931, if memory serves, and their currency just fell into decline after they went off the gold standard. What the citizens did in retaliation, they stored their gold overseas. The government said, "Okay, we're going to play this game with you. We're going to now block gold coin imports," so they couldn't get that gold back that they stored overseas, and they only allowed 4 coins per citizen. So you had to basically prove you're a collector in Great Britain to own more than 4 coins, which is kind of crazy. And then the Bank of England, super centralized entity, decided if you were truthful and you were truly a collector or just stating this to keep more than 4 coins. So the key point here also is gold wasn't part of their monetary system, just like today for us. And, just wondering like if they could only seize gold if it's part of the monetary system. No, they can actually seize gold even if it's not part of the monetary system, like we saw in Great Britain. Now, can Bitcoin be stopped? In theory, for that to happen, all governments will have to coordinate to shut down the internet. So every single government on earth, I mean, governments, they agree on so little, even internally. Imagine having all governments around earth to agree to shut down the internet. And the sad part is, even if they somehow miraculously pull that off with the greatest negotiator ever that managed to get them all to agree on this, it still won't work because you can run the Bitcoin network over radio signals and mesh networks. So this is, unfortunately, that's not going to work. Now, how is the price of Bitcoin determined? And how is the price of gold determined? This is another key factor for me. Bitcoin's price is determined 100% by supply and demand, based on perfect numbering and math. There's no gimmicks to Bitcoin pricing. The more money that flows in there, the higher the demand, the lower the supply, or the higher the supply, the lower the demand, that will adjust price. And that is unfortunately not how gold works. So gold prices are set by several banks. It's set by an oversight committee and a panel of internal and external chair members. And they calculate the figures based on supply and demand in the gold futures derivatives market. And they basically take that and establish averages for both the spot price and the fixed price. So that is super centralized. You may say, well, I trust the banks, I trust these chair members, and I trust the panel of internal, external chair members, but I don't. That's super centralized. If they get corrupted for whatever reason, they could play around with the price and it could be super manipulated. So yeah, essentially gold is priced by centralized entities, and depending on how much you trust them, I say go for it if you do. Now, central banks don't control gold price, but you got to look at their policy. Some of their policies can actually impact gold. So changing the interest rates, for instance, that's one way they can actually manipulate gold. Buying and selling of gold can impact the price. So they can just do a massive dump of gold or a massive buy-in of gold that can quickly manipulate the price. The interest rates is probably the bigger one where they can just quickly manipulate. Then looking at the last point here, and it's an important point, but it's not the most important point for me, and that is the price of Bitcoin versus gold. Although this is pretty significant and eye-opening when you compare these two, this is to me the least important thing when looking at Bitcoin. When I look at Bitcoin, I look at the store of value. It's the hardest currency. It's a medium of exchange. It's got a unit of account. It's absolute digital scarcity. It's storage of energy, and it's the hardest currency man has ever found. And you look at the bonus here and saying the price is important to some people, and to many people the price is important. That's the only reason they're in Bitcoin. But if you truly understand the fundamental issues with the financial system and the economic system, this is going to be the last thing you look at. Now, having said that, it is pretty attractive. So you look at the price movement. I'll just kind of go over the gold total return. So you look at the last 15 years of gold. Pretty impressive, 589% total return. If you invested in gold 15 years ago. If you invested 10 years ago, you would have had 133% return. If you invested 5 years ago in gold, you would have had a 75% return. Now compare that to Bitcoin. If you invested in Bitcoin 10 years ago, you would have had a total return of 13,600%. Last 5 years, 560% compared to gold's 133%. And then last year alone, 125% total return for Bitcoin. And then most importantly, some people would say, oh, but that's the total return. What about the average annualized return? If you look at the average annualized return, Bitcoin is 63% year over year over the last 15 years. The average annual return of gold is 9% per year. So 63% average annual return versus the 9% over gold. So even though price is almost irrelevant to me, if price is relevant to you, this is pretty attractive. This is really attractive. So I know there was a lot of things I just went over there. I just kind of want to summarize this and summarize why I prefer Bitcoin versus gold. Honestly, the main things, just to kind of go over it real quick, scarcity. The scarcity is uncomparable. We don't know when gold's going to end. The supply is going to end. The hash rate calculations and difficulty, the fact that you can calculate the difficulty of mining, the actual profits that going to give a miner, and it's running on a linear scale based on price, based on supply, based on demand, and based on how much Bitcoin is left and have been mined and what's available is incredible to me. The deterministic aspect of cost of production is big as well for me, because we know exactly how much it costs and we know exactly how much is left. It kind of goes into the previous point of exactly how much is left to be mined. What kind of ASICs computing and the energy levels that we see, the energy pricing that we see, that's staying pretty consistent. The storage mechanisms, no comparison. I can't store my gold easily. We went over that, and that is really a big one for me. The transferability, no comparison. I can transfer my Bitcoin anywhere in 10 seconds, anywhere on Earth. Gold, that's real tricky. Store of value is decent with gold, way better than fiat. But still, there's no unit of account. So even if I do have a store of value, I'm still relying on centralized entities, panel of chair members, and banks to decide what the price is. And there's no unit of account either. So if someone is corrupt in this industry or someone manipulates the price, it's going to be tough for me to validate that without a distributed ledger like Bitcoin. Medium of exchange, no comparison, more divisible, easier to exchange, transferred anywhere. Government control and seizures, like I went over, almost next to impossible to seize from a government perspective. You look at gold. Gold's got a nice, healthy history of being seized by powerful governments and empires, so no comparison there. How the pricing occurs, Bitcoin's pricing, supply and demand, gold's pricing, centralized entities. No comparison there for me either. And then as a bonus, the price. Like I said, I don't care about the price, but it is super attractive if you do, and there Bitcoin wins again. Now, I want to say, having said all this, I want to give Bitcoin its respect. I want to give gold its respect. Gold has really stood the test of time. Gold is probably top 5 store of values for me, but I would not personally touch gold just because I know how much superior, Bitcoin is to it, and how far superior Bitcoin is to pretty much everything else. And it's basically digital perfection and pure absolute digital scarcity. So there's no comparison for me, but I wanted to talk about this today just to kind of give you some of the pros of Bitcoin, some of the pros of gold, let you make up your own mind. I think you could probably tell my mind is made up. It's an easy decision, but definitely worth talking about gold, because gold really has had an impressive history. There's no denying that. So I want to thank you for listening here. Once again, this is not financial advice. I'm not a financial advisor by any means. I do study these things and study these markets, but I'm not a financial advisor. So please make your own decisions and do what's right for yourself and your family. And I certainly hope to see you for the next episode. Thank you so much.